Find out how investors should react to the ongoing trade talks between the United States and China. Joining us for that is Darrell Cronk. He is Chief Investment Officer of Wells Fargo's Wealth and Investment Management. And Darrell, every time we hear a headline, it kind of whipsaws things, although the velocity of the whip may be a little lesser every time. What do you think?
Yeah, it seems to be getting muted every time. The markets are, at least, I think, thoughtfully taking this with a grain of salt on every back and forth. Candidly, it seems like this has been off for a while. I mean, so 3 weeks ago, Beijing was very direct about the idea that for a phase one deal to happen, they wanted to see the September tariffs rolled back, not just the December 15th. And so I think that's somewhat been a non-negotiable for the U.S. So I would say, you know, a phase one deal has been frosty for some period of time. I'm not sure exactly why this week, you know, we've really focused in on it, other than...
Well, we're getting closer to...
Yeah, December 15th is, you know, a week from this Sunday. We tend to think less about, you know, is it on, is it off, day to day. It's more about the substance of the deal. So how much validity and real power is in the deal. And right now it looks... With a week and a half to go, they'd have to get something organized this week if there was any real substance.
Let's say they don't. Let's say that there is no deal that comes by the 15th, and maybe put it to the extreme scenario, assume that those tariffs actually go on, those additional tariffs. Yeah. What happens to the market then?
It's probably worth 2 to 4% to equities, to the downside from here.
Joe, you agree with that?
Well, I think that's what's changed in the last couple of days, is that there is a new expectation that potentially you could see new tariffs being imposed on December 15th. That's the dynamic in the marketplace that's changed a little bit. But Darrell, I don't understand why investors should not condition themselves for this to be topical throughout 2020. So we may not impose tariffs on December 15th, but I would think certainly the Trump administration would say, okay, maybe March 15th of 2020, we will impose those tariffs if you do not do the following. We need to condition ourselves. This is going to be with us.
I agree, Joe. And I think it's, you know, you have to watch for not just the amount of tariffs and when they come, because those are with us for a long period of time. I would say you really need to watch what we're paying close attention to is to what extent this evolves from a tariff trade conversation into a tech war, right, into 2020. So if tariffs were the narrative for 2019, is a tech war the narrative for 2020, which has real market implications.
I was going to say, instead of 2 to 4%, if these tariffs go on, what's the implication for that?
Well, obviously, tech has been the leading segment, right, up 38 to 40% year to date. So if you really start to take, you know, the Huawei and all those types of restricted lists to another level, now you've got real-world market implications that I think matter much more than just this slow build of tariffs that kind of have direct economic impacts and indirect impacts on CEO confidence and business sentiment and capital spending and all those types of things.